Good evening, traders. It is it is January the 16th, 2013. I am Adam Harris. I'll be your presenter for this week's Midweek Market Focus. By surprise, I'm doing the Midweek Market Focus again this evening. So for the second time this year, which is good. I thought I would be doing it again on the 30th. And these are some of the topics that I'm going to be covering with us tonight. And I'm actually really excited. This is going to be just an awesome episode. So I'm going to be doing an in-depth analysis technical analysis of the euro against the US dollar. And then I'm going to do my standard kind of stock indices overview. Then what I'm going to do is I'm going to have a look at a few stocks in more detail just to talk about why stocks are presenting such good opportunities for people now. So if you're a stock trader and you're not doing currencies, this is something for you. And obviously if you're a currency trader, this is a reason why you should be looking at stocks. So I'm then going to do my standard kind of currency and commodities. I'm going to run through the different pairs, and then I'm going to go into the yen pairs, because obviously everyone's kind of like, well, what do we do with the yen now? So I'll talk about that, obviously. And then I'll finish off with the quote of the week. So I will try and do this relatively quickly. I really don't want this to be longer than an hour, so let's just see how we fare. This is where it gets kind of cool. I'm going to have a look at the euro over a very long period of time, and this is how we're going to do this. We're going to go look at the monthly time frame. So we're going to have a look at this, because the real question people ask is, how is it at all possible that you can predict so far into the future where a currency can go? So that because so far some people think it's lucky predicting where a lot of the charts are going to go, but it's not really. It's based on a trend. And that trend is like a fashion trend. You can kind of see when it's changing, but you can also see when it's setting up. So what I'm going to do now is I'm going to pitch an idea here. It's just an idea, and we're going to continue, it depends on how long I do this for, but I'm going to continue to refer back to this idea, and we'll see how things unfold in line with that. So this is such a cool concept. Now, so I'm looking back here. We've got data here in eSignal that goes back to 1972. And I'm going to just pitch this idea. There's a little bit of a trend line potentially over here. It looks like it works really, really well. So we seem to be trending upwards. So for all of those of you who think that the euro is incredibly weak and it's going to crash, you have to be aware that we're sitting within the top 25% of the history of the strength of the euro against the dollar, so we're not actually crashing at any point. The next thing I'd like you to notice is that I'm looking at the cycles as well. So we really do seem to have a channel that we're sitting in, which is incredible, but we do. And also we appear to have these cycles that occur, kind of goes up to high there, and then it pulls back to the trend line, and then potentially up to here. And the question we have to ask ourselves is, will this now pull back to the trend line again? So relax for now. It's not too important about that. I'll get to that because that's years away, and I'm going to demonstrate this. If I take the period of time from if I measure the period of time from this point to say this point, and then move it, of course it's going to take the wrong it's going to move the wrong line, which is just typical, and then move it up to here. What I'm expecting, or what I'm looking to see, is the kind of same period of time to see how we fare with that. So it's actually probably going to be from around about there today. We'll see how that goes, and we'll tour that idea. So just connect these, connect that. So there's our trend line. So we're looking at something approximate like that. Now I'm going to go down to the weekly, and I'm going to come back to this. So the weekly, what I'm looking to do is to connect this trend line from here coming down to here. Now, I'm not a big believer in trend lines, but I do pay attention to them. So I'm not superstitious, but you do kind of make sure that you don't walk under a ladder. At certain points, it's just a habit. So I'm just going to keep an eye on this. But this is where I find it gets really interesting, because we have a bit of a trend line occurring down here. We also have this upwards trend line, and so it's plausible that the cycle could come down into this particular area. So there's a period of time. If it came down exactly at that same point, we would be sitting at December 2017. way into the future. And if it came right down into the crux, we'd be sitting at about December. We'd be sitting around January 2020, a very, very long way away from where we are now. But it is interesting because it's probably going to happen. I kid you not, it's probably going to happen. I'm pretty, I've been doing this long enough to see things like this will probably go exactly right. So our main concern is just the idea. I just want to pitch this idea at you to show that this will come down to this level. And it also gets really interesting because when you put a line in here, it matches up with this resistance level. I mean, this is just kind of spooky, man. Just crosses through that apex over there, and we seem to find it lines up with a support resistance. So wouldn't it be interesting if it goes up and down? So I guess I'm going to toy with this. I'll look at it in a bit more detail, but I guess it's fair to say we might get price kind of coming up here, breaking down. I mean, I don't really know how it's going to go about doing that. It could do any number of formations. It could even potentially not even do that. It could potentially kind of then bounce kind of there and then kind of there. It could do anything. So there's just a number of different ways that this can unfold. But we're going to keep looking at these. I want to just draw your attention to that. I just find it fascinating that could possibly be something that could happen. And obviously, if that is the case, if this is something that does start to ultimately unfold, you can be sure that when it gets to this particular level, there's going to be that reaction, precisely because of what we've just seen here. So I'm going to take that out of it for now. And also, we're talking about the fact that this is, we're talking this is 4 to 7 years away. It's just a long way away. Okay, but in the meantime, it just means that the euro is not really going to move much between sort of 1.3 and 1.1. That's kind of, it's going to go up to anywhere between 1.5 and 1.1. That's kind of it. And then it's going to kick up from there, excuse me. The point is, that's kind of what we can anticipate and expect it to do. And the good news is if that relationship between the euro and the dollar is anything to go by, it means the dollar is going to do a similar type of thing. So they're going to be relatively stable. Now, let's go and have a bit of a further look at this. So we've got a big support level here that's actually, we've kind of encountered, we found some good support there, and the euro has successfully kind of rebounded off that. And it's currently working its way up. So when we go look at the weekly, we can see this clear evidence that we're in an uptrend. We've got, obviously this is stuff we've been talking about in previous midweek market focuses. We have our confirmed uptrend, which is fantastic. So I've obviously had a sterling year trading. It's been really good. So it's kind of climbing up here. My main concern is what are the kind of levels that we're going to encounter resistance from. And I would say to you that generally looking at the most, now we're kind of coming down from a very much long-term overview to where we are now. And it seems to me that the levels that we're going to encounter, I'm really concerned about what's ahead of us, what's above us. And the levels where we're going to encounter the strongest resistance, if you ask me, will be probably around about here. I'll double check it now, but it's around, I've got it at 4139. And my concern is this, I'll tell you why. If I look at it in the past, it sliced through that, but when it came up here, it had a very allergic reaction to that level and came back down. Alright, it managed to climb up, reacted off it, broke through, managed to slice through it on the way down, came all the way down, climbed up, had another allergic reaction, came all the way down. In the past we had another allergic reaction here. So in other words, this is a very strong level. So it's very fair to assume that we could hit it here. Now isn't it interesting that also around about the area where we're going to hit it is in line with the downward trend line. So this is kind of spooky. But you know what? Stranger things have happened, and that's what trading is all about. So it looks as though we're potentially going to head up to that. That's possibly where we're going to collide, somewhere around here, and we're going to have we could potentially have a really big reaction against that. So if we do, I prepare for one. If, on the other hand, it slices through that, breaks through the trend line, because I've been very generous with my trend line. There we go. I'm on the absolute outside of that trend line. All the way. It doesn't matter. It's all the way. The point is I'm as generous as possible, so I believe that if we slice through that trend line, then we have a different scenario on our hands. Then what we have is likely to be breaking to the upside. I don't think that's really going to happen. I think we're probably going to turn around here and start to work our way down again. So what that means is that we have a good approximately, we have somewhere around, 3 or 4 months of an uptrend on the euro before we potentially begin a downtrend again. And so that what that involves obviously is several levels of cycles, because obviously we have to be very cautious about this. We have these you know, we have these phase ones. So we've got a phase one there, we've got a pullback, we've potentially still in the phase one now, and at some point we could have ranges, we could have pullbacks, we can have all kinds of things that can happen before we get up to this level. However, we've had really fast moves in the past. We've had dodgy moves. You know, we've kind of had it broken up like this. So I can't really predict how that's going to go. But it's looking interesting how it's going to go. Now we just need to keep an eye on these key levels. Here is the previous high that we were at. There's another high over here. There's a big previous high there, and there's another level over here. And so we have. This is the biggest high, because if you think of this as scaling mountains, this is the previous high that we were at in February, the beginning of 2012. Okay, so once we break that, it's pretty significant. Once that then indicates that we're probably going to work our way up to the next level. And I would definitely be prepared for an actual weekly reversal at this particular point in time. But for the moment, we're looking pretty good. The other thing that's worth thinking about as an idea is if we measure this point from the bottom there to the highest point here, it's possible that if this does repeat an A, B, C, D pattern, we could find that we head up to somewhere around about there before we then encounter our actual second pullback. So we might find that we get an A and a pullback and then head up to that level. It's possible. This is just an idea. I'm really concerned about this hurdle, but this is the potential. We could just slice through it. It's possible. Like we did here, we could just have a really strong move up. We could just have that happen. And that's quite I would say if we slice through that level, then I would say we're probably going to run up to that level. And what's interesting is, wouldn't it be interesting if I look back in time and I find that that level has been significant in the past? And it has. What do you know? I mean, it is spooky, right? Support, resistance. So we've got all these. Look at that. So we've that's just an idea. That's just a concept I'm putting forward. It's a very long-term plan, so I need to kind of see how things unfold from there. But it's, you know, it happens. And another thing is, you know, people ask me, they always say to me, how far back do we have to look? Because people seem to be under this impression that you don't need to look back. But let me tell you something about these horizontal levels. Once they're there forever. They are there forever. So in fact, the further back you look and the more touches you see, the more significant that level is. So if you're asking me how far back you got to look, well, it doesn't really matter. Once you see 2 or 3 touches going back over a couple of years, that's it. That level is set in stone. So it's there forever. Okay, so you need to look back as far as you feel that you need to be convinced that that level is significant. And I would certainly say if you check on your weekly chart and you see that price has actually managed to change direction at that level, then I would consider that level significant, because it means that it's managed to actually change the trend for, you know, months to come, months at a time. Okay, so here's this idea. Potentially we could hit resistance here, but we could slice through it. We could run all the way up there and then encounter a pullback. A longer pullback, something along the scale of this, which means that even though the weekly is only doing a pullback, the daily itself is actually doing downtrends, guys. So you're actually doing lower highs and lower lows on your daily chart. So the next question people ask me is, well, can I trade that? Yes, you can. You can trade the daily in a downtrend. Absolutely, you can. All I want you to do is to be conscious of the fact that at some point it's possible that the weekly could kick back into a phase one. You just have to be aware of that. And again, you can identify those key levels. So having done all of this, let's just go and have a look at a few key things here. I'm pretty happy with that. Let's go down to our daily chart and start to look at what we're looking at now. So if we look at the daily chart, we've got what appears to be sort of a relatively decent uptrend here on the daily. We've got these cycles occurring here. We appear to be at the top of a cycle, and actually it's encountered this resistance, and at the same time you can see what was previously resistance here is potentially acting as support. There's actually a day missing because this is yesterday, so this is not the right day. Something's gone funny. I need to restart my e-signal. Just bear with me. Let's go and restart e-signal. Something has gone funny. Really? Oh, there we go. There we go. Okay. So we've got today's bar, and it's still struggling to find. So the question is, will we find support? Yeah, and it's possible we will. It just broke through there, come back, find support, and then proceed upwards. Alright, so if it starts, so in other words, this is an income generator setup, because you've got this pullback, you put an entry above that, your 100 point stop below that, take a run up to this level, guys. Don't get hopeful. take your profit at that level. If we go back, you'll see that in the past that was strong enough to change the direction. So you set your profit at 3490, which makes sense because you're just under 3500. So take your profit at 3490 and just take the money and go. So there's some good setups here if this is the case. If on the other end, because I mean it just makes it's too. I think it's still going to run up, and then I think it's probably going to go down sideways. So we've got to talk about a number of different possibilities here. Possibly a run up to there, potentially then start to work its way down to about that level, then probably continue to go up. So there's a number of, just a number of different possibilities that can unfold here. But the likelihood, the direction in which it's going is obviously longer term is up. We just need to get in on our entry. So placing an entry above this, if it does turn around tomorrow, that should actually help us. And it looks like it's finding some support there. So that's cool. We'll look at that, and obviously what we're going to do is we want to see when it gets up to here. Then what I would expect is once we work our way up to here, then what I would expect is 2 or 3 weeks of a longer term downtrend of lower highs, lower lows. Okay, and so that's what I would expect when we get up to this level, but probably then once that we go back into a nice long uptrend. Okay, so the beauty of this is that even though that very big level is here and we can hit that in the next couple of months, is that we have lots of cycles that we can just milk as much as we can get out of it. Okay, so that's the concept, that's that overall idea of where is this likely to go and how much can we get out of it. So really we're just trying to time those cycles. We're looking for red bars to come back, we're looking for a green bar to give us that entry, potentially to indicate buyers a step back into the market, and we're looking to go. And then, occasionally that happens. Occasionally you get a setup like this. We were in a beautiful uptrend here, high lows, high highs. We pulled back, we got our green bar, we figured it would go off, and it stalled. It stalled before it could break to a new high. Now when that stall happens, and then price starts coming back, you should be getting out of your trades because something has changed at that point. So what I'm looking for here is a point where if we come up and we fail to get through this, that's okay. But if we start stalling immediately before we even come up, even up to this level, if we start immediately stalling, then there's a potential problem. But once we break through it, we're good to go up to this level. Okay, and then we reassess what's going to happen. We wait for a pullback, we get back in. If it breaks through this level, we wait for a pullback. We take our profit here, we wait for a pullback, we get back in. It's okay. You take your profit there. If it breaks through, it will come back. It'll test support. We'll take it again. Doesn't matter. You'll get that. Okay. So I think that covers a really interesting idea about where we're looking to go with the euro. And so in order to justify that, and what I'm going to do is go look at the dollar index now, because that's something I always do. And let's just have a look at that at the DX, the down low on the DX. All right. So the main thing is we'll go to the weekly because we need to see what the weekly trend is doing. And what we appear to be getting here is obviously this potential head and shoulders. Now, I mean, this goes back obviously a while. We were talking about this trend line, being broken. It's been clearly broken. It's done. There's no doubt about this. The dollar is coming down, and that's going to support the euro going up as well. But it's not that simple. We have a couple of really big hurdles in our way. You can see there's some reaction that's kind of occurring over there, but there's a really big, strong support level underneath here. It's been really incredibly strong support in the past. So we have to get past that first. That's really, and the thing is that level is most likely the thing that the euro will encounter on its journey up, which is probably this level. So the inverse. So in other words, we've got room to run probably to that level. We're going to encounter some resistance here, then we'll probably make it to that. Then I believe that the dollar will have a very strong reaction and we'll have a bigger pullback. And so that matches the inverse of this kind of behavior here. So we're looking to probably run up to here, then we've got to get through this and then break through that. And once we break through that, the game changes entirely. Then we work our way through on a much bigger level down. So just really to take away from the fact that we're producing lower highs, so we're running out of buyers. Sellers are increasing. Even though it keeps rejecting the level, it keeps coming back to the level. In fact, every time it bounces, it goes up a little bit less higher, a little bit lower, and then it kind of comes back down. So we've got to get through this, but we definitely have to get through that level, and it's incredibly strong. And this is where dollar buyers are going to get in and out of the market. So be hugely aware of that. And of course, as the yen is devaluing, that strengthens the dollar. So what we've got is the yen doing its own on its own mission, is actually giving strength to the dollar that is supporting it, which it wouldn't ordinarily have. If the Japanese weren't doing what they're doing, we would have just crashed away under that. So just be aware of that. All right, let me just pause for a second and check where I'm supposed to be. What's the next thing that we need to be doing? Here's the slideshow. Let's have a look at the stock indices overview. All right, let's have a look at where they're going, because it's looking incredibly bullish. Just amazes me every single time I'm recording a midweek market focus. There's always laughter and noise in the background. It's like during the day it's dead quiet except when I need to record this thing. But anyhow, so let's go and have a look at that. So we'll look at the FTSE. Again, we'll go look at the weekly. This is looking really, really good. No surprises to those of you who've been following the midweek market focus. We sliced through 6,000 eventually. That was great. We needed to do that. We are encountering another level here. We've actually broken above it. So believe it or not, our high point now has broken above where we were in 2011. The market has gone to a brand new high, guys. It's looking good. We've got a nice new trend here. We've got strong high lows, high highs. This was a significant breakthrough. Where obviously the problem is you're now kind of, in many respects, we are at some point expecting a pullback. But now that we've broken through this level, I think we'll have a bit further move up and then we'll pull back. So the question is, how far can we go? Well, we're in a position now, potentially, if I look in the past, to be fair, there's another level there, that's what we're probably encountering, but the implication is we're going to go much higher. I would say next big level for us is going to be there, 6249, we've got some room to roll. We'll watch all the round numbers, we're going to watch all the round numbers, 6200, 6300, but I think the next one, 6250. 6250 is a big go for us. 6250, then what we can expect is a pullback, probably right down to 6000, and that makes sense because we couldn't break through 6000. Couldn't break through 6,000, go up, come back down, find support on 6,000, and then continue. So it's looking particularly good. I'm really excited about that. So if we go down to the daily, I don't really want you guys to trade the stock indice itself because it's so volatile, it's just incredibly choppy. But I do want to confirm to you that the trend is looking good. It's holding nicely. We're looking really, really, really good. If I then jump across and look at the Dow Jones, so we've got the Dow Jones here. We go back to the weekly. The weekly is worth looking at because every week, you know, I'm doing the midweek market focus every week or every 2 or 3 weeks. So therefore, the weekly chart is worth looking at. We're looking good. I mean, we're on our way here. Regardless of the high test that we get over here, we're just breaking through that. We've just completely disregarded it. We're climbing up. We're close to our high that we were at earlier in the year. We're coming back to that. We're almost at our all-time high. So what we might actually find, I know early on in my midweek market focuses, I was talking about the fact that we have to be very cautious of a downturn, but what's interesting to me is the speed at which we're heading up. I would be very curious to see if we actually break to a brand new all-time high, which would just be fascinating to me, because it doesn't make sense in today's world where there's all these problems financially that we just would keep going, but I guess it's self-fulfilling. People are wanting to put their money somewhere else, and the charts are just climbing, and people get greedy, and they just keep buying. Look at the NASDAQ. NASDAQ's also looking good. We've broken that previous hurdle. We have our previous high there. We're producing a high low. We pulled down. We climbed up. We've broken it. We're on our way up, so we just got to get past 2,800, 2,900, break on up against that. That's looking okay. And you can see that generally the trend is up, so we're looking good. We then look at the dollar S&P Standard & Poor. And we've broken past, well, actually we're sitting at that same limit. We're sitting at the high, we just need to get past that. We're sitting right at 1475, just below that. Let's see if we can break through that particular level. So, fantastic. Looking good. Once we do that, our all-time high is sitting kind of, we're going to sit roughly around there. So we're on our way to another all-time high. And the last time we were obviously there, was 2007, before the big crash. So the point is, we're on our way up. So I'm not saying we're definitely going to have a crash exactly at that exact level. I want to be prepared for volatility to enter the market, that we may actually begin to have the beginnings of the next cycle downwards. So we don't want to call it a crash. It'll be a crash to people on the streets who don't trade because they'll panic and they'll think it's a crash. But to us, it's just part of that standard cycle. And obviously, everyone will be going, yeah, but it's the conditions, the credit issues, it's all this. That's what that crash is. You know what, maybe, but in 10 years' time, we'll have similar cycles happen. We'll have other issues that will cause it then. So it's just cycles for now. Keep the emotion out of it. Just, keep an eye on it, and let's see if we break to a brand new high, and if we continue upwards. We'll know when we start to break the lows. When we break the lows, we know we're starting to head into a downtrend. And that was it. And Russell 2000, this is amazing. Russell 2000, which is another one, has broken its all-time high. That's incredible. So this one, which was a bit of a laggard, had quite a big pullback last year, has actually broken above its all-time high. So what you have is out of all five of these things, they're all hitting to highs. We've got an all-time high here on the Russell 2000. We're basically showing incredibly bullish beyond the mark. So what you should be doing when you look at this, okay, aside from the cycles, what you should be doing for this year at least is looking at buying stocks and getting ready to short them, but on the way up, just buy them. So that was the stock indices overview. Let's go and have a look at why stocks are such great value. Okay, so we're going to have a look at this power play. And you can see I've got a weekly chart here, so you know me, I'm a bit retentive about that. So I've got my cycles here, looking at this. And you know, there's just some amazing stocks. I'm just going to go through. I've got all 350 listed here. It doesn't really matter too much. The point is that, you know, if you trade currencies, for those of you who trade stocks who don't know anything about the currency side, it's incredibly volatile. You would have seen my midweek market focus, as you see how volatile it is. Stocks are easy by comparison to currencies. It's a no-brainer. It's just such a simple thing. Trade at end of day. It just will really add to your thing. But the success depends on your selection of stocks. I don't want you to worry too much about sector. I know that that's a thing, and I have a big respect for the guys who look at the sectors. I'm more really concerned about focusing on individual stocks, regardless of the sector. I'm looking more for volume and liquidity, and keeping an eye on the weekly, because really what you don't want to get caught out is you don't want to be overextended on the weekly and then have a pullback on the weekly. But what I do want you to keep an eye on is definitely have a look at these have a look and see if you can identify stocks that are trending incredibly well on a moving average. Say something like the 20-day moving average. Okay. Oh, okay, nothing there. Let's just go and add in a moving average. Make it a 20, switch it on, and we're in. We're in business. Just watch that interaction on that. Try and identify the cycles. We're looking now, we've got a bit of a pullback happening now, but it's coming down. It's probably even coming down to support. And also this is one thing that stocks appreciate a lot more than currencies, is that stocks really respect their support and resistance levels a lot more. So you can well, a lot more I would say than currencies. Currencies might pull right back through the support, come down to another support level. Stocks tend to come down to the most recent support level, but they don't really have to. So we've got a point, we've got a pullback here. There's a stock. You just go through the list of 350 stocks, you find the ones that you like, and those are the ones that you start looking for entries on. Here's a nice one, another one. It's a bounce, and I mean, look at that heart rate. It's just incredibly good. So for those of you, it might not be sexy, but man, it's pretty good. You have a wide stop on it. Definitely have a wide stop on it. Not like 100 points or something like that, but you definitely have something that allows for this little bit of volatility. And you'll see that these things just trend. I mean, I'm looking at a weekly chart here. Look at these things. There's only one direction. Not the group. Not the group. Just the adjective. Okay, so now we have a couple of other things here. You know, we've got stuff here, encounters resistance, and then it gaps down. So this is broken, so you can't trade this. But historically, it was a good one. You get a couple of those. You get something like Burberry was obviously was the darling. Prior to that, it was fantastic, and it's just broken. So something's gone wrong here. You can't trade it here. So you just walk away from it. You just don't trade that. But then you look at something like Diageo, which is the darling at the moment, and this one is just almost perfect. Can do no wrong. Coming down onto the 20, low testing on that, looking absolutely fantastic. These are good buy opportunities, and you just milk them. Okay. So it's really worth your while to investigate doing that. And I know people are going to ask me how they can go ahead and do that. I would say to you that you have a number of different choices. You should either attend, obviously, our stock course if you haven't done that. You should also contact eSignal, ask them to, if you want to, they can subscribe you to all the stocks so you can install you'd have to get permission. I think to some degree you need to attend the course with K2A. I think that's the smartest thing to do because of the strategies that are involved. But otherwise, yeah, ultimately you need to keep an eye on these stocks and look at getting the quotes, getting the list of stock indices from eSignal, and starting to work your way through that and trading that from a technical analysis point of view. But it's you just got to have it in your portfolio. If you look at something like this now, you wouldn't really trade this because it's a downtrend, and obviously there's only a certain price that stocks can go down to. They can't go any lower than zero. So shorting stocks is not really a good idea right now. What you will need to do is at some point in the next year or two, when the market does start to bottom down, we'll be shorting the stocks that are right at the top, that are overextended, that are coming down, because that's where we'll get most of the money we'll take out of them. And so, yeah, we've got stuff here. You want to be very cautious about this again, coming down. So, shorting stocks right now is not really the smart thing to do. I would do that. I would start by going on long on stocks. And this one would not crack my list. It's too young. It hasn't been around long enough. If I win a trade on this, then it's more by fluke than anything else. So, I really want to make sure that I'm kind of just finding stuff like this. Look at this. Beautiful. Kind of cycling, bounces off the 50. It's turned around. It's gone back phase 2, back into phase 1. Look at that. It's broken the previous high on the daily, so now it's definitely doing high lows, high highs. So we wait for a pullback, wait for an entry to get back in and to go long. So just wonderful opportunities here. You guys who are trading currencies, you're not sure what to be taking. You need to just include these. So the painful thing is there's 350 stocks, but the stocks that are working, the ones you trade the most often, do not change that often. So there's only about 20 or 30 of them. There may even be less. There may be 15. You just go through them. The ones that you like, you just store those, and those are the ones you trade. Now, so I think that's just really an opportunity for people to go through all of these and just stay away from the ones that are incredibly volatile. There's no clear trend here. Why would you trade this one when this one is available? So it's just common sense, okay? And obviously you have to widen your stop a certain amount to allow for that volatility, because you get gaps up and down, you get the noise, but you do know that the general current is trending upwards. You also can see the cycles. They're easy to identify by comparison to currencies. So, and you've just seen that the world indices are all heading to brand new highs. So we have a large degree of safety that the market is clearly intending on climbing. So, you go through those stocks. So there's opportunities here to make millions. Lots of money. If you have a 10 grand account, you should be up to 100 grand within a year. So there's and get it to $1 million within 2 years, because you just get all these, but you just select the primo stocks. And to be honest, between you and me, if you're a master trader looking at 1 to 1.5 to 2% on a stock trade, if it's clear, if it's a good quality cycle, that's acceptable. So there's greater than 1%. Why? Because it's more reliable, it's more trustworthy. But you guys, if you haven't done it, you definitely need to attend Gary's stock class, okay? Because there's more to just this. There's other stock trading opportunities. The master trader stuff is trading the gaps in the US. It's phenomenal. There's some really big things there. So just that idea, but here we go. So just have a look at that. Now, let's go and have a look at what else we got. Okay, currencies and commodities overview. Let's just run through those. We now are 31 minutes into this, so I don't want to kill you guys with things. Let's go to my currencies. Let's go have a look at this page. And let's work our way through these things. Okay, so we've discussed the euro. We know exactly where the euro is kind of heading. And we've got those things that we need to watch out for. Cable. Guys, essentially cable is just ranging. So it's got a ceiling it just can't seem to work its way out of. It's got a bottom. What it is doing, and what's worth paying attention to, is this low here. Because you can't really trade this right now anyway. But what we do want to do is we want to watch and see if price turns around before it breaks this low. If it turns around before it breaks this low, it's probably going to break through. What it's done is it's already breached that level. It's already breached it. It's rejected it. But if it turns around before breaking this low, then it's actually going to reconsider it. It's actually going to climb for it again. It's going to go for it again. And that's cool, because what that means is if that happens, you get dollar weakness, and then you get euro strength, and so you get a whole lot of trades that actually support each other. And then we break through. We'll probably break through this level. And I think that's pretty significant. Look at the Swissy. And here's the thing, guys. I want you to be aware that what we have is an uptrend that has kind of started to fail a bit and go sideways. So the Swiss are trying to push the chart to the upside, but it's kind of going sideways. And if we go down to the daily, what you would have witnessed is a daily downtrend. And the problem is that the daily downtrend is now starting to encounter some issues here. We have a definite kind of support level, and what's actually happened is we've produced a low and a high and a higher low and a high high. So don't be fooled. The Swiss chart is now officially in an uptrend. Okay, it's gonna cycle down and it's gonna start cycling up. So that's in an uptrend. It's not generating a lot of money, so just be aware of that. It's just going to continue. It's going to be a bit of a waste of time, but it is generally, so you guys need to be prepared to go long on that. Look at the yen pairs. Obviously, what we're trying to do here is we've had a really big run up. We're waiting, obviously, for a pullback. I'm going to discuss the yen pairs in a few minutes, and we're going to go into that in big detail. Point is, this is all fantastic. So this has made most of us a lot of money if if you've been watching the midweek market focus, from when it was here, we were looking at the breakouts, and of course this trend has just run and run and run, and that's fantastic. There's some good news here, guys. We haven't seen a trend of this magnitude in a year and a half. I mean, we just haven't seen that kind of a move. So it's lovely to see that, because it might tell me that this year we might be getting new trends that we haven't had before, and conditions financially around the world for some countries might be changing. So we might be getting new trends introducing themselves and conditions changing. So that's fantastic. Aussie dollar. This is a really interesting one, because on a longer term basis, I can see that this is trending upwards. Okay, I can see it's trending upwards. I can also see that it is encountering serious resistance here. But every time it gets knocked, it comes back and produces a high low. And it's coming up again. It's been rejected. It's coming up again. Okay, that doesn't look like that much until you look at the Kiwi and you compare it to the Kiwi, and there's no doubt the Kiwi is in an uptrend. It's just cycling up. Okay, it's also got a resistance area that's got a breakthrough, but there's no doubt they're climbing up. And again, if you've been watching the midweek market focus, we were talking about this months ago. This was clearly identifiable. We knew when we looked at the weekly that the Australian dollar was going to the upside. Regardless of the fundamental reasons people can find, it does range. It has a ranging problem. It ping-pongs between these two levels, and then on a smaller scale, it ping-pongs between a few other levels here. So it's ping-ponging there, and it was actually ranging for a while here. So we have these kind of little ranges that happen, and then we have the bigger ranges, but it has managed to work its way up. So it's probably going to break through here. I can't tell exactly when, but it's as in I can't tell if it, but I'm thinking we're probably going to break through in the next couple of weeks. Let's see, unless we have another strong rejection off that. Keep an eye on this, and we're going to break through to an all-time high. So that's all looking relatively good. So definitely you want to be trading along on these and just making sure you're at the beginning of phase one rather than at the end of phase one. Keeping an eye on those key levels. But that is looking fantastic. Okay, so pivot, snipers long, that's the direction you guys want to go in. Just keep an eye on those cycles, guys. But again, it's lovely because we were able to predict this going back quite a while. Now, CAD dollars. The problem with the CAD pair is if you compare it to what I just showed you, I mean, the Aussie is not even the best we've seen, but at least I can tell it's going up. The CAD pair, there's just no direction here, dudes. There's nothing. So don't trade CAD. There's just no money to be made in this. Just walk away from it. It's actually battling around parity, and it's got its own thing. And last week's midweek market focus, I went into great detail on the CAD pairs. So I'm not going to go into it in too much detail, but basically we have produced high and a low, and a lower high and a lower low, and a lower high now. So we're potentially on our way on a downtrend. So across all the pairs, the Canadian dollar looks like it's going to weaken this year. Or at least over the next several months. So just trade in line with that. But it's choppy. Be prepared for that. Here we go. We look at Euro cable. We have got higher lows, higher highs. We're in an uptrend on the weekly. If we look at the daily, okay, we look at the daily, we're definitely in an uptrend. So we've got these clear cycles. But obviously we're at the end of phase one here, so we're expecting a pullback. So you can't trade this yet. But we're expecting a pullback, but definitely looking good. So, so again, climbing. We look at Euro Swissy. Most of you shouldn't really be trading this because it's kind of broken. But if you were going to pick a direction, it should be to the upside. We had a really big move here. We're stalling. We're potentially coming back. So be aware of that. Euro Yen is obviously climbing here. So I hope you're seeing a trend here. We've got an uptrend on Euro cable. We've got an uptrend on Euro itself. We've got an uptrend on Euro Swissy. We've got an uptrend on Euro Yen. We've got a weird trend on Euro Aussie. There's no clear trend right now. Definitely kind of trending up, but also has encountered a ceiling and is trying right now to just be producing high lows and high highs, but it's having problems. But I would say, like the Australian dollar, it's going to creep up. So the point is, Euro Kiwi is just crazy. Euro Kiwi has been ranging, ping-ponging, so trading that is going to make it incredibly difficult. Trading there. Currently producing slightly higher lows and a high high, so we'll see what happens. And we've got EuroCAD, okay, and EuroCAD's climbing. There's no doubt about it, EuroCAD is climbing. So what you have across the board, or at least for almost all of the Euro pairs, you have got a clear uptrend. So end of phase one, potentially pulling back, but you guys should be looking for longs. And the one thing they have in common is the Euro. So clearly the Euro is strengthening across the board. Okay, now we jump across to Cable Swissy. Cable Swissy was in a downtrend and appears to be in a downtrend to the untrained eye. That was a downtrend, but that downtrend is now finished. And how do I know that? Well, I know it's finished because we have found support here and we have produced a brand new high. So we have actually broken our downtrend. We've gone from lower highs, lower lows, to an equal low to a brand new high. And it's actually going to come home now. It's going to drive you. Well, I'll prove the point. If we step back, we look at the weekly. What I would like you to notice is that we have been gently trending upwards. So what it appears is that we're now beginning the beginning of the next uptrend. If I jump across to Euro Swissy, you can see that same kind of pattern, not really great because it's broken, but it's to the upside. If I look at Aussie Swissy, you can see clear higher lows, higher highs, kind of struggling, but it's going to the upside. If I look at Kiwi Swissy, you can see clearly higher lows, higher highs. It's climbing. This is a weekly chart. And of course, if I look at CAD Swissy, we have got the same thing. We have got these higher lows, higher highs. It's not great, and it's not great conditions, but it is real. And so every chart you'll see with the Swissy pairs that was trending down, you will now see a clear low to a higher low, to a brand new high. And that's an uptrend. So what you want is obviously you need to wait for it to pull back, but you need to start preparing to go long on every single Swiss pair. So CAD Swissy, Kiwi Swissy, okay, Kiwi Swissy, low to a high low to a high high. It's got to get to that level, but that's the case. You look at Aussie Swissy, we've got a low to a high low to a high high. Breaking through that level, it's broken through it. So we're in an uptrend on the chart at this point in time. So Kiwi Swissy, Aussie Swissy, CAD Swissy, and Cable Swissy has broken that as well. So it's choppy. I'm not arguing that it's choppy, but what I am saying to you is at least I can tell you where it's looking to go, which is up. So we'll just be identifying those cycles regardless of your strategy. You need to be paying attention to the quality of all these charts. Okay, you need to be aware of that. Okay, now having another look at cable pairs. Okay, we've got Cable Aussie, which has got no clear trend. It's got this noise, and it's trending down. It's broken below, so it's actually not looking good. It's almost on a longer term trending to the downside. And we've got Cable Kiwi, which is just all over the place. So I had quite a few losers on this particular trade. I took a trade here, and I got in again, but it's looking, because it's showing a lot of indications that actually wants to go long, but it just isn't. So that particular trade setup has just cost me quite a bit, but it's fine. I'm still up for the month, so I'm happy. But the point is, you can't trade this. So there's just no clear trend here, so you should be walking away from that one. And of course, Cable CAD is just the devil incarnate. There's just nothing here, so you need to walk away from that as well. So that's both Cable, which in itself sterling, which is generally a choppy chart, combined with CAD, which is a choppy chart. So you kind of look at that, it's a bit choppy, and you look at sterling, and it's a bit choppy. And so basically you get it, mix it together, and that's what you get. Now the other one is Aussie Kiwi, which is also not giving us a clear trend. Was in a downtrend, then it went from high lows, high highs, went into an uptrend, broke it, produced a lower high. It doesn't know where it's going, has no idea what it wants. You can't trade that, guys, so it doesn't matter what your strategy. Walk away. Aussie CAD, there we go. Kind of, again, nothing to trade here, no money to be made here. Okay, Kiwi CAD climbing, definitely in a bit of an uptrend, but more tradable. Kind of having a bit of a problem, but it's definitely trading to the upside, which would mean that Kiwi would strengthen against the Canadian dollar, or that Canadian dollar would weaken against the Kiwi. And then that leaves us with literally just the Singapore dollar, which is effectively useless at this point. It's sitting, finding support. It's tied to the dollar. It's not really making a lot of cash there, so don't trade that, especially if you're a beginner. And if we look at the Swedish krona, we're trending downwards, quite volatile. Be aware of that. We had a low test there. We've bounced off that level, so potentially support. So nothing to trade. Walk away from that. And the Norwegian krona, which is definitely trending downwards. Too volatile to actually trade unless you're doing sort of small intraday trades like snipers and pivots, but just being aware of that volatility. Okay, and then we look at this is looking at gold. Gold is trending downwards. If you remember, what we were looking to do was we have found a very strong support level and a very strong resistance level up there. And what we're expecting it to do is to probably come down, and to break that. So we go to the daily. We want to do a buy order on gold. We get to this particular level, we're looking to place a buy order here, and also what we want to do is we need to see gold. If it's going to go up, it'll break this trend line, this little trend line here. It'll break that. Then it'll head up to the top and it'll probably break through, if that's the case, because that would be unusual, because every single time it's ping-ponged between these levels. So if it decided to turn around now, come up here, it's probably going to break out. That's fine. We can live with that, because we can do it. There's nothing to trade right now. It's actually in a downtrend, producing lower highs and lower lows. But what I actually think is going to happen is that it's going to break this little trend here probably, and start to break through that, and then head down here. We'll hit a buy signal, and then we'll just buy it on the way up. So that's probably what's going to happen. Historically, the best place for it to be is in an uptrend. It's always trended up. It's now stuck in a range, and this range is as a result of this. It was a bubble, panic, everyone bought gold, then it had this wobble, and now it's ranging. And the reason it's ranging actually is it's recovering from all of this behavior over the last few years, and it's trying to decide what to do next. But it's an appreciating kind of asset, so it's probably going to just climb. We'll see what happens. I don't think it's going to boom. For those of you who think gold is just going to run away and you believe all the stories you hear about it, not to say that they're not true, but the fact is that it's quite regulated, so it's not just going to run out of control. But the point is we'll see if it's going to. So in the meantime, we're just going to watch that trend line. We're going to watch this one. My expectation is for it to come down here to buy it and then to trade it all the way up there. At some point, I do expect it to break out to the upside. So it's either going to break out to the upside first, or it's going to come down first, then go back up, and then we'll see. We'll reassess at that point if it's going to break out to the upside. And silver is actually quite similar. In terms of behavior, silver is offering a buy opportunity at the same kind of level, which is here. It's actually a little bit higher. Just there. Buy opportunity there. It's also ranging. Same thing. Ranging there. We're expecting it to come down. We've got a little bit of a trend line here. We're going to see if it maintains that trend line. And of course we have a little bit, so it's identical to gold in that respect. So we're going to see what happens. Does it break down to the side, come down here? Does it break up there, hit up there? They'll probably do it together. It's unlikely one would go one way while the other one goes the other way. So we'll just keep an eye on that. And let's have a look at oil. Oil's climbing the last time I looked at it. So let's see what happens now. Yeah, there we go. Okay, so oil's climbing. Was producing low highs, low lows, wobbled for a bit, has produced a higher low here, and has started to climb from there. It's very choppy to trade, but it is certainly showing an indication. If we look at the weekly as well, it is certainly showing an indication that it wants to climb. So we have this trend line here. Let's do that, and we have something actually happening here as well. So we've got that occurring there. We've got something like that happening. There we go. Probably put that there. So oil is kind of stuck really where it's going to go, ping pong between those things. So just be aware of those and then trade it kind of in line with that. Okay, let's have a look at Apple as well, just see how Apple's doing. You can see Apple's trending backwards down. What the problem is that Apple has broken this previous low. So it's gone from high low, it's broken that. Not only has it broken it, but it came up, produced a lower high, and came down and produced a fresh low. So basically it's coming down to the next key support level, which is here. So I would expect for those of you who are interested in buying Apple shares, the best place to do it is to come down and buy, wait for it to hit 422, and what that will do is probably find support there and then probably start to climb its way up again. So it's fantastic because it means that you can buy it for almost half the price. Just over half the price that it was at its peak. That's really good, I think. Apple shares on sale at half price. Okay, Google is just looking strong. It's going from strength to strength. It's still managing to maintain high lows, high highs. There's a bit of a swing low here. I'm not too concerned about that just yet because the market's still looking good. So potentially this is something, if you were into buying and holding, it still looks like it's going to go up. Obviously it hit close to 800. It was actually probably 775. Close to 800, but it's going to probably carry on with that for the rest of the market. And historically it's a winner. So that's just showing you about Apple and Google because people always want to know what those things are doing. Right, I think that covers most of those. So that's a currencies and commodities overview. Let's have a look at our trade, our yen pairs. What's going on with those? Okay. So what I'm going to do is, as an example, I'm actually going to just take all of these yen pairs and put them together. So take them, put that down there, take that, put that there. So we're going to look at them as a herd. Cable yen, sterling yen. Sorry, I'm not allowed to say cable yen. Take that, put that there. Kiwi yen, put that there. Cheers, cheers. And Swiss yen and CAD. So we have that. We've got these pairs. We've got all the yen pairs. So there's a definite, we'll go on to the daily and have a look at these. Okay, so there's an uptrend. Euro yen, there's an uptrend. Cable yen, sterling yen, sorry, there's an uptrend. Aussie yen, there's an uptrend. Kiwi yen, there's an uptrend. Wait for it. There we go. Swiss yen and CAD. Okay, so all pulling back, all of them forming what appear to be low test bars today. If you can remember from your course, the low test bar getting formed today. So all looking actually as trade setups. If you're doing income generators or power swings, those are your setups today. So you basically have 7 potential trade opportunities tonight. And so that's fantastic. So talking about trade opportunities. But what I want to do is manage your expectations. Let's talk about this for a second. What I want you to observe is the angle at which we've headed up. Okay. That angle is really, really, really steep. And if you compare that to Apple, okay, if you look at that steepness, the speed with which it climbed, kind of gets it to a point where it just gets too expensive, it just gets overpriced. And the yen has done that. The yen has kind of moved at such a pace. My concern is that it's actually overdue for a pullback for a while before it then can continue upwards. The trend is looking good. The weekly is looking good. Everything is all looking really, really nice. But we have a catch now. We're torn because we have low tests forming in a very strong trend, indicating an actual trade opportunity to go long. So the question is, do we take the trades or not? And I'll tell you what I'm going to do. I'm going to take the trades. I'm going to place orders on most of the charts. I'm not going to take it at 1%. I'm going to risk it at anywhere from 0.1% to 0.3% per trade. And I'm going to take them all. And this is my philosophy. The worst case scenario, I'm going to demonstrate something happening here. The worst case scenario is all of the trades go wrong. I don't know how they go wrong, but let's say they go wrong. So I'll lose somewhere between 1 and 2% across the board, total. So I know that's 1 or 2% total loss. And that's fine, because today I made about 3%. So I'm not too worried about that. But if I'm right, I'll make about close to 1% each, which means I'll be up about 7 or 8% if I'm right. So for me, that risk is fine. However, the concern I have is that the speed at which we've climbed is too much and it actually needs to pull back further. And occasionally you get this setup. You get a setup that occurs, then triggers, but then fails. And I'll tell you what the clues are going to be. I want you to be aware of this so that as it happens over the next few days, you can actually kind of see what's going on. So if we take a chart like Euro Yen, okay, I'm going to go to the weekly. I want to show you something here. Because remember, support and resistance is absolutely everything. So you can see where our previous horizontal levels are there. Then we have another one up here, and we have another one up here. Is a big one. There's a big one. And we've got a few others. There's definitely something happening over here that kind of collides with that. So I'll put a line in and see if I can get something that will collide with both. Yeah, something like that potentially. So we have a bit of room. We seem to have broken above this big level. We seem to have broken above that. And if I go look at another one, if I go look at Aussie Yen, you can see if I do the same thing. If I put a horizontal level in here and kind of over there, we've broken way above that. Our next big level is possibly somewhere coming up to here's a big level up there. There was potentially something here, some kind of a support level that happened. There's potentially even something here. Maybe there's another thing there. But, we've kind of broken way above that. So the next big level is up here. We've kind of got that next big level. So when I look at that, we've got a next big level up there. If I look at something else, I look at Swiss yen. Now I want something with clear peaks that I can identify stuff on. So let's look at this. So we go here. We've got definitely some kind of a resistance level here. And the next big one is probably somewhere up here. So even if we go there. So we've broken above that as well. So in a way, we've broken above into brand new highs. And what could happen is we could have a very shallow pullback, find support and go. That's definitely one possibility, is that this just continues and just like on a rampage, it just goes. Okay, it just goes. So we have a very real possibility that that's the kind of thing that can actually happen. We look at the yen itself. And you can see all these key levels. So we've broken nicely above that one, which is a strong support area and resistance area there. We found a really nice support area here. We've got another level up here. And look at where we are. We've kind of broken way above that. And that's been a strong support in the past. So there's a very real possibility that we've got room to grow, and we could keep going. And based on that, I think that I would rather take the trade with a very small amount invested than not take it and watch it climb. It's not that it's definitely going to climb. It's overextended for sure. It's overdue for a pullback. But there's a signal there saying, I'm not done yet. I'm ready to carry on. And so we've investigated and consciously we're aware that it could pull back. So the kind of thing that could go wrong is I'm almost certain this is going to trigger tomorrow. I'm almost 100% certain the yen pairs are going to trigger. But I'm not certain they're necessarily going to then turn into winning trades. Alright, so I'm going to explain to you how we know for sure they've gone wrong. The first thing is, the first clue that we're in trouble is if price on any of the charts fails to break this high. So we see a trigger, comes up, and then it starts stalling. Here. Just starts stalling. Starts holding back. Won't going to go anywhere. The confirmation that you're screwed and the trader's a loser is the second we break this low. The second we break that low, the daily is now definitely going into a pullback on a larger scale on the weekly, basically on the weekly chart. So if we jump to the weekly chart, what will happen at that point is if the daily does that, the daily is pulling back on the weekly. So chances are it will pull back a significant amount, probably go into a downtrend on the yen pair for a significant period of time, something like down to here or potentially further. But it'll pull back further on the weekly. That's quite kind of significant. Let's go and have another look at a pair that might do that. Okay, and I'll repeat what I'm looking out for. I'm looking for any of the yen pairs ultimately to trigger and then fail to kind of break above that high and maintain it. And potentially as soon as they start to come down, that makes me a bit worried, but as soon as they break that low, if they break that low significantly, you're done. Okay, that trade is now going into a downtrend. Therefore, I would ask you to consider keeping your stop closer on these yen pairs rather than with a wider stop. Just, it's an idea, because if it's going to go bad, you want out as quickly as possible. So you just put your stop a lot closer, something like 10 or 20 points, maybe 30 points below the low of the bar. And then if it turns around, boom, you're done. You can see it's going to head down into downtrend. Then it's probably going to come all the way back down to here, possibly even a bit further down. But then it's going to turn around and we're going to make it up. So don't worry about losing that money, because you'll make it up. You'll make it up in 2-3 weeks time. When it's done its rundown, you might even be able to do a few. Then somebody said to me, well, can I do an income generator down? Well, you can, because once price starts to do that and it comes down to produce it, you're going to get sell signals and you can trade it down. But at least you're consciously aware that the weekly trend's going up. The daily trend is probably going to kick back in at a later stage, because the weekly is going to pull back and then it's going to turn around and go back into phase one again. So you trade it down, and then at some point price will come down to a key level, and obviously we'll have a look at that. We'll be keeping an eye on it. We'll see price turn around and go long again. So that looks pretty good. So that's just a good trading opportunity. Yeah, and so we'll see that. So those are the key things we really want to look out for. We also know for a fact that, yeah, if we break that, that's fine. If we break the previous lows on our cycles, the daily is then in a downtrend, which just means the weekly is in a pullback. It doesn't matter. It just means the weekly's gone from phase one to phase two, and it's going to pull back. It's not going to pull back drastically, but it does mean you can then switch for a short period of time, probably a certain distance, you can switch to selling on to pivots short, snipers short on those particular charts. So I just want you to be aware of that. But I do know that the yen is then going to continue back into an uptrend for certain for the next few months. So we just need a pullback and then we'll turn around. That's a worst case scenario. That's if we continue to go down. I would also say the clue is across the board. If across the board, every single one, if you start to see 3 or 4 of the charts come up and break the high, so if you see, I don't know which ones they'll be, but if you see Swiss yen, for example, or CAD yen come up and break the high, and 3 out of those 7 have broken to the high, then chances are all of them will. So then you're fine. But if none of them do, then probably you're going to have a longer term pullback. So I just want to demonstrate where this has happened before, and then I'm going to wrap up. Then we're kind of done. So if I look at the EURUSD, I want to bring you back to a point where we had the perfect setup. We had a beautiful setup here. We were producing high lows, high highs. We had a really strong trend. Pulled back a little bit, hardly gave up ground, climbed again, pulled back a little bit, climbed massively, came back again. Produced a low test. Looked absolutely fantastic. Cycles, price action, everything looks good. So taking a setup like this looked fantastic. Now, there was a longer term downtrend. The problem is that the longer term downtrend is actually broken, but it doesn't really matter. The longer term downtrend introduced a lot of bears into the market. The point is, price turns around, triggered us into the trade. Looks good. Day 1 looks good. Day 2, interesting. Stalled. Didn't really go anywhere. So you're okay, fine. Okay, fine. What does day 3 do? Day 3 moves on. So you're like, okay, we're fine. It was just a hiccup. What does day 4 do? Day 4 reverses. Warning sign. That was a warning sign. Another additional hiccup. 2 hiccups in a row shouldn't really have happened. What does the next day do? Reverses completely. So now you've actually gone, you've produced a lower high, we've turned around, we started going down again. So if you were in the trade, you would have got in about here, you would have got out there with a very, very small loss, like less than 0.1% of a loss, or you would have got stopped out below this bar kind of thing. The point is, it's done. That is now officially in a downtrend. Well, it's probably going into a downtrend or a range, but it's not going into an uptrend again. You're done. So just have to be kind of very cautious of that. But that was just indicating to you how the price action can give you signals. It gives you a funny action, then it gives you another funny action, and then it does something even worse. So kind of 1, 2, 3, and that's it. You should just that's price action. And so that's something that I'll be looking at. We want to see, does price come up? Does it break to a new high? Does it stall? Does it act funny? Does it give me another warning signal? Does it reverse? Does it break the low? We're done. Confirmed, of course, when we broke the low. There we go. We broke the low. Confirmed downtrend. Okay, lower highs, lower lows. We're done in a downtrend. That's it. So I know I've rushed through this. It's still 58 minutes in, and I've thrown a lot at you. I hope it's all recorded perfectly and the audio is good. I'm sorry there's no page 3. I promised you a page 3 goal in today's episode. Not going to happen because it was too short notice. And so I'll have to do it for the next one. Sorry about that. I know. Sorry, guys. I know you're disappointed, but there we go. So let's do that. Let's just keep an eye on those things. Let's be prepared for take the trades. We've looked at a worst case scenario. We know how to identify if the trades are going bad. We also know there's a lot of good trade setups actually occurring today as we speak. So these are income generators you can place your orders on tonight. And we know what to do if they're going wrong. We know not to risk 1% on all of them. We can do less than 1%, but take all the trades because they're all looking relatively good. We know if they're going to go wrong, they won't break that high. Or they'll stall, they'll act funny, and we know that if they then come down and break the low, we're in trouble. Okay, also what I would like you to do, very important, place your entry at least 5 points plus the spread above. So 10 points, basically. If you're asking me, 10 points above the high. 10 points above the high, because I can tell you it's going to reverse. It's going to trigger us into the trade for certain. And if it doesn't, we're fine. There's no harm, no foul. But I'm pretty certain it's going to do that. And the question is, how far is it going to go? Okay, so we've got some room to run. So a wider stop on this 20, 30 points is probably a good one, because then if you get these little pullbacks, you stay in the trade. It's quite good, and you stay in the trade and you keep going. Okay, so that's it. Thank you very much. That's 59 minutes. Let's have a look at the quote of the week. I quite like this one. There's quite a few out there, but this one's pretty good. This is I have 2 basic rules about winning in trading as well as in life. If you don't bet, you can't win. And of course, if you lose all your chips, you can't bet. So obviously, what we take away from that is, if you don't take a chance, you're not going to get anywhere. And I know that if you've got into the trading, you've determined to, and you've never traded before, and you're scared, you're determined to make that difference to your life, and it's a real thing. You can really do it. You really can do it. You just stick with your coach, but read the cycles right, analyze the chart. Don't worry about the news as much as we do. Don't obsess over it, and just learn to read the charts. It's not that hard. Once you start focusing on it, your brain will figure it out. It's just our brains are incredibly powerful. So the point is, and you got to bet on yourself. If you don't trust yourself, you're screwed in life in general. You've got to learn to trust yourself and be the kind of person that you would bet on. So you need to do that. And you're much smarter than you are. Just make sure you're using your brain. Just apply it. It's amazing. Now, okay, so if you don't bet, you can't win. And of course, if you lose all your chips, you can't bet, which means that if you risk too much and you lose it all, you got nothing left. Okay, I know people who are doing the stock course. They're on their pension. I know people who are broke. I know people who have nothing and who are doing this to try and make a change to their life. So we all started there. I mean, I've been there as well myself. You don't need to know my personal story, but I've been there as well. So starting from scratch, you can do this, but you're going to make mistakes, but don't lose it all in your mistakes. So you've got nothing left. So you guys will learn how to analyze and do that properly, and the money will come. The money will just come when it does. But you just need to do everything the right way. So it does require patience, but in the process you mature, you become a better person, I think, I hope. That's it. Otherwise, guys, have a fantastic week. I think, still be doing the midweek market focus on the 30th of January. I believe that's my next one, and I look forward to seeing where the market has gone, and we'll analyze what happens at that point. And otherwise, yeah, happy trading, and just have a fantastic couple of weeks, and I'll speak to you soon.